Welcome to Fintech Frontiers, the podcast exploring people, products, and ideas shaping the future of financial technology. I'm your host, Stephen Walsh, CEO of Keeper Solutions. This is where innovation meets insight. Today's guest is Christian Shanahan, founder of Payji, a startup driving collaborative innovation for local ecosystems. Based in Bristol, Christian is helping empower communities through fintech and is currently fundraising to scale up. He has a bold vision for local economies and community-driven tech and brings a fresh perspective to the fintech space. Christian, great to have you here on the pod today.
Thanks, Stephen. Nice to be here.
Good stuff. So, Christian, maybe we could just dive in and you could tell us, like, what is the big problem that you saw that you wanted to go out and solve, and maybe you could tell me as well how you arrived at that, and then we can delve
No problem
into
at all.
that
Yeah,
during the conversation.
absolutely. I think a quick kind of intro into how we arrived at it will make sense. So for us, this all started at COVID, and we had a SaaS product back then, which had to do with actually hospitality, which you think, what's that got to do with what we're doing now? But of course, COVID decimated everything in terms of hiring, hospitality, everything went down. We looked at trying to pivot a little bit and not furlough anyone, Stephen. And we had, if you remember, during COVID, we had an awful lot of supermarkets and stuff where you had to get a slot. If you remember that time, you kind of, it doesn't seem that long ago, of course, now.
Yeah.
But we're thinking, we have so many lovely places on our own local high streets. So every community, no matter where you were around the world, would have kind of local fruit and veg shops or butchers or cheese shops or bread, bakeries, etc. And we thought, they're not really accessible during COVID, but when you look online, they're saying they're open. They were on Facebook, etc. And so we decided to build our own little micro, let's say Amazon, very crude, but it ended up being effective. And where I live here in Bristol, it's a postcode BS3, so it's quite near the city centre. So we built this, we are BS3. We just spun it up really quickly, got all the developers on it. And essentially it went really, really well. The first 10 weeks, put about 25 grand's worth of sales through. So we just basically gave a lot of the businesses be able to showcase their products and services to local public and get it delivered, right? So masks on, etc.
Okay.
But
so
when
they're able to showcase, but people were able to go in and order, and
they could do click and
pick up
collect,
their boxes, or you could deliver them.
Absolutely. Yeah. And we built this lovely collaborative delivery service as well. So if shop number one kind of said, I can't do that delivery, they could put it out onto our platform externally for only the other shops to see, which meant they can said, I can do that. No problem at all. So they would bring their collaborative deliveries together to do one delivery. So it ended up being a great kind of starting point for us. But we really noticed that coming out of COVID, you are fighting against the Shopifys of the world, and Etsy's of the world. And we went, we can't compete with the small budget that we have. We knew that they were going like this, but that the discover local, shop local was just a fabulous narrative that actually really didn't have much substance behind it to drive that in terms of, let's say, the infrastructure, etc. You had many of the councils and business improvement districts wanting to push it, but the cost to do it was crazy. And that's why Amazon was just kind of, taken over. So what we decided to do was to send out some research forms, what we just call it feedback, saying, guys, thanks very much. We want to keep this open, but we'd really love to know what the root cause of and those pain problems are for every one of you. And one of the things from speaking to the shops that we onboarded at the time or ported over now to Shopify and just put stuff on Amazon or eBay was that they didn't know what their transactions were, meaning that they kind of had an idea from their contract or a guess that actually they were paying, I think I'm paying 2%. When they, when you really look behind the scenes from the accountancy point of view and chargebacks and refunds and so on, what they were paying was a lot more. So they'd fill out a contract saying, I've been told I'll do this, but they wouldn't meet the threshold of the amount of money that they had to put through. So they would, that the actual amount of transaction cost would be higher. And so we thought this was the first light bulb moment in thinking, okay, first of all, there needs to be a more transparent way. There needs to be an easier way. Why are the costs soaring? Why are they so high? And there was a couple of different reasons. I won't go into all of them, Stephen, but one are kind of a mobile app and so on, where you can kind of, they made it from a UX point of view, from a user experience for these businesses and merchants. They made it so easy for them just to say, I can use my phone to take payments. This is great as we have now. But I suppose the backdrop of that was you were paying a premium, and you still are, when you look at some of these small kind of terminals, etc. The second part, which I didn't understand back then, was that it was taking a lot of money for the reconciliation of these kind of, tapping to kind of get into the merchant's account. It was taking a lot of time. So we approached the ones like,
From the time of the transaction to the time when the
it
funds have
got
cleared
settled.
into the merchant's account?
Yeah. So we describe it. We've got to a stage now, Stephen, where we describe it as you tap your card or you double click on your Apple Pay and your money goes on a little round the world trip. And
Yeah.
it stops off at various large corporations along the way, as we call it, such as permissions, authorizations, collections, before it eventually, after about 3 to 5 days on this lovely balloon, kind of comes back and then drops into your account. And what we've noticed is if we went and had a £5 cup of coffee, that by the time that balloon had gone off and stopped everywhere and came back, actually what ended up in your account, being the coffee shop's account, was about £4.80, let's say. Right. So you think, where's my 20 pence gone?
Right.
And everyone had
Yes.
taken their little bits. And what they would claim is that actually this is our fee for doing stuff in the background for you. And I remember being in one of the meetings where one of the team had said, yeah, but if I send money to you, Christian, you get it straight away and you get all of it. What's the difference? The difference was easy. It was a company, right? The minute you put that you're a .com, you're a company on there, that's it. You've entered into the world of kind of, this is how we're going to make our money. So that was the next kind of light bulb moment in thinking, right, we had people that didn't understand their transaction, didn't understand the back of what was happening to their money when people were paying. The second one was that there was that narrative that I described was called acquiring. And acquiring was basically something that, Visa and Mastercard had put together and said, this is what happens when you tap or pay with your money or on your phone. So we kind of questioned why acquiring was needed. And there was some good answers and so on. But essentially the second part was kind of me sending you money and getting it straight away. Well, there's a peer-to-peer transaction here. So why can that not happen in business? And the answer was it can. So it became almost that it was a very obvious corporate greed going on. We'll just do this. This is how we make money. We'll set what the transaction fee is. And we looked at some of the research and the data, and actually Visa and Mastercard both agreed that actually the average transaction globally is about 2.7%. 2.7% can be a lot of money. When you look at the great startups of the fintech world like Stripe, what they've done in Ireland and kind of now US, etc., and over here, essentially when you're spinning up a company at the start is one of the best things to do. What you can do with that platform is fabulous.
Yeah. It's
But you're
phenomenal.
paying 1.5% plus EP if you do it just as an ordinary kind of one-off merchant, a pop-up small startup. And it's a 20p that really hits you. 1.5% doesn't sound too good. But if you are a coffee shop or a bar or so on, and it's those small transactions, they're the ones in particular that really get hit because you add that 20p on, then you can understand why Visa and MasterCard say, actually, it's 2.7%. And what you're about 3 to 5% by the time everything happens over a year.
Yeah.
So I think that was the other moment where we said, surely there's a better way. So that set us on our journey, Stephen, into how do we innovate this, but actually, how do we come up with something that's simplistic enough? Because I think having the idea of change is great, but if it becomes too complicated and too big, you end up going, we don't have enough money to do that. So we need to come back down again and look at what that grassroots problem is. And that's where the original problem ended up looking at it and thinking, right, let's come up with a solution, but this solution has to be simplistic. And the first obvious one was to look at the peer-to-peer model. And there was quite a few companies actually out there already doing a peer-to-peer model. You looked at the European banks now at the moment, kind of saying, look, if you want to move money from one bank to another in a different country, we're now setting up this interbanking kind of schedule where you can do it. There's not going to be the fees there. You can just transfer over, etc.
Yeah.
Again, peer-to-peer, make it much easier for them as well. And it's a PR, it's a marketing stunt for them. But the acquiring piece, no matter how many peer-to-peer models were out there, was still there. So yes, we can send it there. It's fine. We can reduce the cost, etc. But there was still the acquiring piece, people using cards. And when everyone has a phone now, Google Pay, Apple Pay, and so on, you thought, how are we going
Yes.
to get them to move away from it? This is going to be very, very difficult. This is why it's not being done. So there has to be another catch. There has to be another hook, for want of a better word.
Yes.
So the next part was, let's look into how much of these transactions are leaving the local communities or the countries or the kind of areas where we live in every year. So the easy one to start was the place where we live. So in Bristol, we looked at it. We looked at the GDP. We looked at how much was going into the economy. The first time we did it was an educated guess based upon how much people spend on every outing, etc. We had worked with the credit unions on looking at kind of where spend was in the local, the local economy here. And what we devised was a really, I would say, very decent and accurate enough model where we came up that £80 million was leaving Bristol alone every year, as almost like
80 million was leaving
every
every
year. £80 million every year was leaving Bristol, almost like a local tax on the county.
Yes.
And that takes into account the fact that we know we're all paying our transactions, but it was these transaction fees, and those pennies were just constantly going and leaving the UK.
Yes.
And off they were
Yes.
then to Silicon Valley, for want of a better way of putting it, right? So
Gotcha.
that was the 80 million. And we thought,
Okay. So
God,
you're thinking, hey, we can get this to stay here.
exactly. What's
Yeah.
it going to take
But
to stay here?
yeah, and I can see the logic to that, and I'm just thinking, but hey, you're pitting yourself up at some of the largest, most successful, most profitable companies, ones that have created some of the best toolkits for merchants to get up and running. So are we in a David and Goliath type situation? Or I'm just fascinated to see how you can get this. You said simplicity is important. You
Yes.
need the value proposition to hang together above and beyond maybe the putting on the Bristol jersey, right? It's got to work for the merchants.
Absolutely.
Yeah.
And that's key. That was the next part of the meetings we would have, saying, are we really suggesting we're going to go up against Visa and Mastercard, which kind of seems like the moment of, this is crazy. But when you look at every startup there's ever been, they've all been born out of something, the needs, the wants, the kind of, how does this stand out, that actually, how do you allow change to happen and coming away from it? So the best thing we could do to start with that was actually contact kind of the Visas and Mastercards and kind of the people high up in there, and kind of actually speak to them and just have an open conversation about why is it what it is right now? Where are the trends and so on? So this is just before you kind of had your chat GBTs and kind of most of the AI kind of prompts and so on. So you had to kind of still, 5 years ago, actually pick up the phone and say, really wanted to have a conversation or a coffee or a fly back to Dublin, and just, where do you guys see the market, And you could see a lot of the trends where some of them were going into peer to peer, some of them were going into crypto, etc. And you could see that regulation and decentralization was starting to happen in certain countries, and kind of, the changes, those moods. You'd look at the Gartner wave and you kind of see, where those trends are going. And you thought, actually, there is going to be an end to the acquiring piece. There's going to be a day where how we manage our money now, there's going to be a huge change, and a real kind of wake up moment. When you look at what's happening in Asia and you're paying with the palm of your hand, or you kind of have facial recognition, and we had not long ago put our physical card from £30 to £100 up, you kind of think, that's just increasing fraud. It's not helping. People say, yeah, but I need that.
Yeah.
It was a game changer when Apple decided to go double tap, scan your face, and you can pay £1,000 if you want to. Why
Yeah.
are we using card? So
So you're
Or the
reducing friction from the process, and they're saying, "Look, this is super convenient. That's why we're charging you your 3%." So, look, I'm fascinated. So, I think we've got to the problem. I'm fascinated now. Can you tell me, like, so how have you tackled that? Is this DeFi, or when you're talking peer to peer, are you talking about account to account, or are you talking wallet to wallet, or what?
wallet to wallet. So
Wallet to wallet.
what we decided was there was two pieces here that had to fit in. So the first bit was, let's talk about what we're going to do. So that's your e-money account, so your wallet to wallet. So that made it quick and easy. So you have no interest or anything like that. You don't earn interest, but what we can do is we can bring it from wallet A to wallet B in an e-money account. So essentially, still a manifestation of cash. I said to you, show me how much you have here, Stephen, today. You go, I can't, but you could get out your phone and say, here you go in my account. Right, can you physically no, I can't. So that manifestation of cash run on fiat, of course, is just kind of is taking more ownership of our own money in our own e-wallets. So if we thought we can set up these environments, let's say, so environment one might be Bristol Pay, and it could be Dublin
Yeah,
Pay, Limerick Pay, it doesn't
yeah,
matter. But
yeah.
essentially within that you have your own e-wallet, and you can take and spend within these other localized e-wallets and move money around very quickly. Only takes a second. It's like going into one bank account to another. Of course, it shows up the minute you do it. But take the acquiring piece out, because we don't need all these other pieces.
Yeah.
So if I
So
said to
it's
someone, any
disintermediation of that piece. Yeah.
absolutely, I suppose if you asked anyone, Stephen, or anyone listening to this podcast, by the way, how much did you earn from your bank this year on interest? No one has an idea. They
Fair
don't know.
enough. Me, I'm interested in more
Exactly.
like
You
it.
could probably go back and find, all these £2.70, £1, like all these coming off, right? So
Yes.
it's very little and no one will be able to answer. So the first part is building the e-wallet environment sounds good, but we've got a second problem now. The second problem we have is, although we can make that work, what about our customer adoption? Why are people going to buy into that? From a user experience,
Yeah.
they have
Yeah.
everything. They have their Apple Wallet. They have it's why move away, right? So what we want is convenience. That's where we're moving towards. So having a solution to a problem isn't good enough anymore, and in the grassroots, and we can make change. It's
Mm.
like the recycling bit, right? Some people do, some people don't, and it's kind of going, we can recycle all day long, but actually we already know, but we don't want to admit that the actual real cause of the problem is the meat, kind of, having to actually all this unsustainability when we kind of factory farm stuff, right? And cutting that down. It's becoming to get a bit more of a bit better. And people are kind of going, yeah, I probably do. But certainly growing up, kind of my day, it was unheard of, meat and two veg, right? So you're kind of going on it. So it's kind of, it's the educational journey a little bit. So that customer adoption needs to have a very good USP. We need to have a really good hook here. So what we decided was that if we could use our e-money environment, and let's go back and say it's going to be Bristol Pay, and said that actually if you double tap your phone, you have your wallets as you would normally do. You have your usual bank of cards and so on. So let's say
Yeah.
we'll use Apple Pay and go through that. But actually we can go Bristol Pay. And whether I move from Bristol over to Manchester, it'll pop up and say, oh, your Manchester Pay wallet. So the Payji wallet will notice from the IP where you are. So we can solve a second
Mm.
problem and actually get it really easy for people to use. Now, kind
Yes.
of like your PayPal and so on, you can drag money in and take money out. You could use it as a
Yeah.
bank account,
Yeah.
etc. Those bits are the easier bits to solve, right? Those bits you can put it up, have it as a bank in a box underneath with modular or something, in the same way as Revolut started Monzo, you know, but still, from the customer adoption point of view, what else can we
Yeah.
do? So
Yeah.
now go back to the £80 million leaves Bristol every
Yeah.
year. So the first
So
thing
is
is,
this a local merchant driven movement then, are the shops around Bristol
it's
saying, hey, why don't you just do this?
yeah, it's both. I think there's a bit more. There's a bit more to it. So the first part is from the B2B and B2C. If I go back one step and we'll say Bristol Pay, we're going to take back some of the £80 million a year. From the B2C point of view, why should the people use it? Well, if we'll say it's not just using your own local, it's not a currency, but the own local payment system.
Yes.
If we then take that and reduce the transaction cost for the B2B, so the businesses, so they're paying on average 2.7%. We come in and we say it's 1%. They go, great. Now, from the customers, we'll say, by the way, if you pay with Bristol Pay, it saves your local shop money. They get paid quicker. They get paid more of it. So for them, they're going, okay, the businesses are saying, yes, I get paid quicker. I get paid more of it. Now, going back again to the customers and the businesses, we're going to reinvest 25% of that transaction fee that we talked about back into a local city pot. We'll call it the Bristol
Yeah.
City Pot. Now, from
Yes.
that Bristol City Pot, we come away from the simplicity a little bit and we look to it as a blockchain, and we basically look at every area, geographical area within Bristol of where the money was spent. So in Bristol, from a
Yes.
postcode point of view, there's 34 areas, 34 postcodes. We then split that up over a year. So if we
Yes.
say we got £1,000,000, split that up. Now in the BS3 area, let's say we look at it and think 250,000 was spent there. That's what we've captured out of the million. Now we can
Yes.
reinvest that 250,000 back into the BS3 area as part of a positive social impact. The people then
Excellent.
get a push notification that says, where would you like to spend your money? Local kind of volunteer groups can put something together, something that can be done within a year period, and say,
You're
we
kind of
need a
creating a
new
local
park.
market for that funding, right?
Absolutely. Let's regenerate the local area, local park, and so on. Everyone votes for it, and that money is then left. That Bristol City pot goes into the
Yeah.
BS3 pot, and then there's a localized area and how the funding can be done by the local community groups. And then that spending then is kind of said, right, let's do that. Let's regenerate this. But the council doesn't need to be involved. The government doesn't need to be involved. There's no one asking to, for grants
Yeah.
and so on. The
Yes.
money that actually we would have spent with our cards anyway now has been reinvested back into that local area. It becomes a people powered payment platform. They have more
Excellent.
control over what they're
Yes.
doing. And I think that's
Great.
so that's the catch.
I
That's
can
the
see how that
USP for
hangs
them.
together. Yeah. And are you? Sorry for cutting across you,
All
Christian.
right.
I'm just curious now because so is Payji providing the kind of toolkit to enable
Yeah, brilliant.
the local community of merchants to provide this offering?
Yes, exactly.
I'm just trying to figure. I can see the social dimension. I can see that you're reducing the time for payments to merchants, and then you may be reducing down the transaction costs. So and having the local fund, great.
Yeah,
Just trying to figure from your startup's point of view. If you could just maybe so the business model. I'm guessing that you're a for-profit company and that you're able to take a part in that transaction that you're enabling Bristol
Yeah,
Pay
you've
or
you've 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 identified already, Stephen, that although we've looked at the problem and the solution, and we can hit a narrative that pulls in the heartstrings for the people in the local area to make sure that money is going back into theirs, it still
yeah,
hasn't solved one problem, and that is actually the adoption from the businesses, right? Why do they take it? And although that money goes
yeah,
in, you can't rely on that. So what we did is we have got to a stage where we built the MVP of the e-wallet solution. But then instead of
right,
launching, we had to kind of step back and say, actually, I think we can get it out to the local area, the local people. But from the businesses, just in the question that you asked, why are they going to take it? There has to be more to it. We can stick up a QR
yeah,
code. We can do
yeah,
something where people have to do it. But when you get to the bar, 2 pints, please, Guinness, right, fine. I'll be on 13 quid or whatever it is, right? And you take out your phone and you just double tap. If you see a QR code on there and you have to go, oh, I'll just scan that. Yeah, I'll just sign up. I'm gonna drag money from my account into this and then pay. No one's doing it. So what we have done is we took our MVP, put it to one side, and said we wanted to launch this start of the year. Let's not. Okay, this is still going to be there. We have in our
yeah,
own minds come up with a solution, but just park it to one side. Let's deal with this part, this issue. So
right.
we went away
I'm all
and
ears.
we looked at starting with one kind of sector, one industry, and the hospitality sector, as I said, has the most GDP and kind of most turnover and so on. When you look at the amount of money going through, and also they have small kind of transactions. We go back to our coffees, our pints, and so on, rather than our bigger kind of, I'm going to buy a jacket or a pair of shoes, which costs more. So it was the perfect one to start. So we teamed up with one of the local entrepreneurs in our own area, who's a Michelin star chef and said, and we said to him, can we go through what your pain points are? Forget about the fintech bit.
Yes.
And he kind of talked us through, we walked through his business. And what we found at the end of it is the hospitality businesses are no longer just hospitality. That still encompasses everything, but they're doing so much more. When you think about it, the first thing you think is, well, maybe as a restaurant, I need to have a reservation booking system, right? So when I'm going there, going out for dinner too, that's the first one. How much do you pay for that, by the way? I'm paying about £170 a month. I said, for a reservation booking system? Yes. Who are they? He tells us who they are. Says, and who are the other big ones? They said, well, there's three big ones in the market. They take up about 60% of the whole market for UK and Ireland. Okay. And they're all similar price? Yeah, pretty much. Can you show us what they do? Yeah, they do this, this. And you can see yourself. You can go online onto YouTube and you kind of go, yeah, okay. We could build that. Yes, but hold on a minute, Christian. I also need an event booking system because we do weddings here. Okay, okay, got it. What else do you need? Well, I also do classes, so I go and teach people how to cook, how to do this. All right, so come back. What do you use for the event booking system? I use this piece of software. So that's the second piece, yeah. All right, what about the classes? I need to use something different again. Okay.
Three.
Anything else? Well, sometimes in the summer, people sit outside, so they scan the QR codes for in-house ordering at table. Okay, so who are you using for that? Someone else. Okay, so now we're up to four. Yeah, yeah. Before I finish, I've also just opened a new place. It's a 10-bedroom kind of place where you can stay and do it. So we're going through booking.com, Airbnb, etc. How much are they taking? 25% of the booking. Okay, so that's this. Okay, so what we're trying to say essentially, and he kept going. He said, by the time when you're finished, by the way, he said, I also need a point of sale. Are any of those doing it? No. None of them do point of sale. That's someone else, and that's mainly hardware. Okay. And then a terminal, the point of sales don't always do the terminals. They come with terminals, but that's with somebody else. All right. Okay. So you sit back and you think, so you've got 7 or 8 different pieces of software. You have 7 or 8 different ones that you need to log into. You have 7 or 8 different subscription services. And you have 7 or 8, when we looked into it, different transactions. So the accountant is kind of pulling their hair out going, this is 1.72%, this is 1.5, this is 2.2, this is this. And it's all different. And for him, he's getting a good deal with all of them because the amount of transactions he's putting through is kind of on each one of them are kind of quite high. However, each one of them, because they don't talk to each other in separate companies, unless you look at maybe booking.com that owns the other one. But even still, even though one owns the other, they just look at what's going through their platform. So they'll say, this is the deal that we can do because you put this through. Yes, but actually I turn over X amount of million. Not with us. You only put through 100,000. Yes, but if you take your main company, no, it doesn't work like that. So we thought, again, there's a problem here. The solution is obvious. One platform, one login, one subscription, one transaction. Now let's undercut. You put all the fees together and they're paying 340 quid a month for all those ones we talked about.
Yeah.
Why don't we build it and tell them that it's 50 quid a month? Okay. Why don't we reduce their transaction costs then? We won't put it through Bristol Pay yet. Let's just do it so everyone can pay in their MasterCard and Visa. We'll use Stripe or somewhere, but actually let's reduce it by 60% or more. God, okay. Now we have a very good kind of pitch to everyone in hospitality. By the way, why don't you just have one login? Plus, we'll do the point of sale system. Plus, we'll do the terminals. We'll bring everything in together and you just go on. And when your staff wants it, they can sign in as well and they can see X, Y, or Z so you can deter what they're seeing. Josh said, this is great. Let's do it. So we went away and this weekend, actually, there's a seafood festival on in Bristol. Is our first time that we are testing our point of sale properly. We're going out, we've been testing for a while, and we've been testing the reservation booking systems and event booking system now for about a year. And people might think, Well, if you test it like for a week, surely it works. You need real world testing. You need everything to be
You do
broken,
put it out in
break
the
it back,
wild.
put it back up again.
Yeah.
Where the aim is to launch this now, kind of very, very soon within the next month as a whole package, and start off and say, why do you need all this? Bring it down, reduce your cost, but from a UX point of view, it will work really well. Now, the last little part of this, Stephen, is that when that company, when that restaurant is, they could be seasonal. They can upgrade and downgrade easily. They're not tied in for a year, because most of them, when they see, said, we have a great rate on this, it's only 1.5%. Great. And you sign up for a year. Then you got to rent all of our terminals. It's like, this is crazy, right? So the last part is that they're just appearing though on their website or their brand. What we've done is we've spun it up that actually we can create the brands for the industry. So they can show up as just their own website as an API. They can show up on We Are the local community, whatever the community name is. If they show up there, they'll also show up on We Are Bristol because they're part of that. Then We Are Southwest, then We Are England, We Are Europe. So, and then on top of that, then if they're just doing reservation bookings, they'll show up on Bookabite, a separate brand. So they can appear on maybe 7, 8, they can appear on 100 brands, but maybe 7 or 8 realistic brands out there for customers to see, but they only have to appear, like, put in the information once, and every booking that comes through essentially are funneled straight into their back end platform, and they go from there. I'm probably giving away too many insights here,
Cool,
but
cool.
this is it, and that's how you deal with that part of the SaaS, because we see more and more even that actually the fintech is actually becoming a SaaS product, and there's many things I would argue with that in terms of how it's evolving.
Super. Look, so yeah, and so you can see that maybe that the Payji could then be introduced at a later stage once you've got a critical mass of hospitality users.
Well, you've got a
Great.
commercially engaged audience then ready, don't you?
Yeah, you do. So tell me this, that sounds like an awful lot of features and functions and integrations. So how did you manage to put all that together onto one?
It's a good question. We needed to build our own proprietary technology for nearly everything. You can't, if you looked at a point of sale or a kind of an integration, let's say there's 120 in the UK alone, right? People have just gone, this is our SaaS product. You can't keep doing integrations and APIs, because what you end up doing is you pick the top ones, because
They're the
control
volume.
50%, and they get bigger and bigger because they go, oh, everyone's using us. So what you need to do, you need to flip it on its head and kind of go, actually, let's not use none of them. Let's just build our own. But it has to be as good, if not better. And the user experience needs to be good, because what we found is the user experience, you might not have a better platform, but if people think, well, this is easy, it's convenient, it works, they'll go with it. But the other platform might do better. It's like the old adage of Samsung phones or an Apple phone, right? Any good tech person will always go Samsung, much better phone, brilliant, can do much more on it. But Apple leads the way because it's convenience. I don't have to think. Everything is done for me. It's clear, crisp. The interface is good. I can kind of click, it connects to what I need to. Yeah, it's simple. Yeah, convenient.
Simple, and it works. Great. I mean, absolutely what you're doing, it'll just need to work and work well. So you basically you're putting it live in production this weekend. You're accepting payments on it, and so
We accept payments
yeah,
on the first bit, which will take, there'll be the acquiring bit to that, because what we want to do is we want to see it working within that live environment, that SaaS fintech live environment, first of all. And then what we can do is we can slowly then bring in the kind of that narrative of the fintech piece to Bristol Pay. So when we do launch it, we can say, actually, that commercially engaged audience is there. Let's now actually start to bring in and say, by the way, why don't you use this? And slowly bring it in. And when people say why, let me give you an example I think is really good, and it's hard hitting for your audience here. If we had £50 cash, people go, oh, why don't we bring back cash? I've heard now this podcast, and the kind of, the simple example is cash, right? But if you take cash and you have £50 and you go into shop number 1 and you spend that £50 and hand it over, then the owner of that shop goes into the shop next door into number 2 and spends the £50 again. And that shop owner too gets it. And he does that again and again, and it keeps on going for another 30 shops. By the time shop number 29 goes into shop 30, he still has £50, right, to spend.
Right.
Now, let's go back. Shop one again. I go in and I have my Apple Pay or kind of my card, doesn't matter. And let's say we look at the average, the 2.7%, and I tap. That £50 now becomes 49.80 something, right? Now, let's do that another 29 times. By the time you get to shop 30, you no longer have your £50 in cash. You have about 21 quid. That's it.
Yeah.
So now where's the other kind of, £29 or 30 quid,
Yeah.
and it's gone
Gone.
because that's the part. They are the bit that have left
Yes.
and gone
Yes.
off. And hence the reason you come up with £80 million a year are kind of
Yes.
leaving the local economies that
It
we all
sounds
live in.
low. Sounds low number for a city of Bristol size, even 80 million. But
Yeah,
so
yeah. I think what we're doing is we're taking a small percentage of the whole full transaction cost. Is about 270 in terms of the transactions themselves, but actually the acquiring bit of what
okay.
leaves, that bit is
Yes.
what goes off. So
Yeah.
you're looking, that's the
Yeah.
bit where you can actually genuinely save money. And the last example I gave you, Stephen, that kind of £50 that there used to be the Bristol pound here in Bristol, and
Right.
it
Yeah.
was something in 2012 the local mayor brought in, and it's a bit Marmite to talk about it here in the city because it was hated or loved, but it was hard currency in a time it was going digital, and it's where do I
Yes.
spend it? But the idea was good, and it ran off
Yes.
something called an LM3 model. So the economists came up with an LM3 model, which is basically the story I told you. But it says for every £1 spent, £1.70, it's worth £1.70 to the local economy. And you think, how do they make that up? But it's the reverse of the story I just told you. Because the money is staying back into the local economy, it's great. But
Yes.
how do you quantify that? How do people see it? And the only way to do that is to digitize it in a fashion where they can actually see that. They see the money going back in.
So the
And they
blockchain will. Yeah.
the
Great.
blockchain will make it easy to kind of.
I love it. I love it. And I'm just wondering though, how, at the end of the day, you're going to have, when when you've got that commercially engaged audience, at some point you're saying, well, let's go and flip over to Payji. At the end of the day, the customer is going to want to point their phone at it and click twice. So they could make a payment coming from, say, Revolut or,
Yeah.
or Mastercard, but then that the transaction from there would be hosted on your peer-to-peer platform.
Yeah, we have to do exactly the same as we did for the SaaS. We're going to have to, within our e-wallet, we're going to have to build our own kind of banking system, which is what we've done. Right? So the MVP that we've done is there. It's essentially, it is a very crude, again, like, kind of Revolut at the moment, but that's how they started out. If you look at what they have done well and what Monzo have done well, is the interface, the whole user experience, going back to that word again, is perfect. It's a very sexy
Yeah.
website, and that's not doing justice, but it
Yes.
just does what we need. I need to split the fees. I need to do this. I need it to go over to this account easy. I need, inter transactions between one country and another, or flip between one currency. And
And that's
people
the
want that.
classic fintech value prop, that we
Absolutely.
see that the satisfaction rates that people are expressing in the fintech apps or platforms tend to be in the 80 plus compared to, say, the conventional retail banks where they're in the 20s. And it's that satisfaction because they're focused on the user experience rather than having all this kind of historic kind of legacy there, that you're able to have that differential, which can drive consumers onto the more modern platforms. Yeah.
And it takes a bit of time for change to kind of happen. So you have to kind of do it in a way that people feel like not much has happened in the background, but actually through the SaaS products, well, I'm using these. It kind of makes sense. Take Shopify, and now they brought in Shopify or Shop Pay, and you kind of go, you click on your Shop Pay, and it going, oh, connect to this. They're doing something similar for them, but still the acquiring side. At the end of the day, you still have your Stripe payment in the background, etc. But they may not be solving a grassroots problem, but they're making it easier for customers. And essentially, the more and more they bring them over, the more control you have. And look, data is where it is at the moment in terms of, the ones that hold it, and have enough there. The more control you have, the more you're able to change kind of, perceptions, etc., innovate a bit more. And so yes, it's going to be a long journey, and who knows if it's going to work. But from a positive social impact point of view, Stephen, that's the one where you kind of have to strive, you have to push these boundaries a little bit,
Yeah,
and go up against these big boys.
absolutely. Well, it sounds like a fantastic initiative, and I think if you're able to get a model working well in Bristol, then why wouldn't you be able to do it in Limerick or in Swindon or Southampton or Portsmouth?
Yeah, absolutely. And
As well.
it's on the roadmap, the whole thing. People go, well, why pick Bristol first? And look, we've such a good network here, but we have to start off for it to become a plug and play, right? For that to be
Yeah.
a plug and play model where you can say, let's spin up Waterford Pay, Dublin Pay, and you look at it, and someone says, right, we'll go to the federations, we'll go to local council, and they say, how much can you save us? Well, how many cups of coffee are spent in Dublin? How many people at this kind of, there you go. There's 400 grand a year already, kind of year one for the city, right? And you go,
Yes.
wow, okay, hold on. So where can we put that? Now the councils might say, can we have that money? And people say, well, we don't trust you to kind of what you'll do with the monies. But, this over here in the UK, you pay council tax, right? And so
You
we
do.
talk about the Bristol pound. Bristol pound, one of the first things it did is you got paid, or you paid council tax with the Bristol pound, right? So it made it easier for the flow of
Right.
money. Now,
Yes.
if we looked at that and went back to them and said, guys, if everyone could pay their council tax, which is mandatory, with Bristol Pay, we can reduce the cost for your own transactions. We could put money back into the local council just for you guys to be able then to redistribute that, so you have more resource to help people. They go, actually, this makes a lot of sense here, right? It goes back into the economy. We can still
Yeah.
use it outside for the local communities and so on. You've got 100% adoption. There's nothing that we do these days in innovation that begins with that 100% adoption, but you could potentially have that. So hence
Yeah.
the plug and play. If it can work in one place, we really think
Yeah.
it can work in another. But you'll be spinning quite a few plates at the same time
Yes.
to make sure to see where that goes.
Yes. And speaking of where it goes, like what does your journey look like, say, in the next 12 months, or even where do you think you're going to be in the 5-year horizon?
Yeah, it's a great question. And I think so many times when I think about this is it certainly depends on what we see happening in the industry in AI at the moment. So you have cross-border multi-currency tools, which is key. So you're going to have to make sure that it, from a language point of view, it can go anywhere. Data-driven intelligence now with AI, so better at underwriting fraud risks and so on. Not to say we're going to go into that, but you need to look at all of these. And despite going UK and Ireland, actually, what we want to do is we want to see this being able to be used anywhere. And I'll give just two very quick examples. I was speaking at the Department of Business and Trade International Delegation a couple of weeks ago here in the UK, and I met one of the ministers, Colombia, well, he's Bolivia, and he was saying, look, we could really do with something like this. He says, but getting it through and helping to be able to put money back into our own economy, we're, reliant on the dollar, all these little things. And when you delve into all of this a little bit more and you look at places like that, or you look at like the Caribbean and kind of how many, offshore accounts there are, people not even there, and kind of what money is actually going back into the local community. And then we had one more example where in Missouri, we were contacted a couple of years ago now. And we haven't lost contact. We just kind of keep in touch now when this comes up. They were talking about, let's say, the lower, more deprived areas in certain districts there, and saying people are just selling from the back of their houses, or they're spinning up kind of, hairdressing or kind of food and so on. And so part of it is they're looking at it as tax avoidance. The other part of it is they're looking at it and thinking, actually, how do we make sure that the money is actually staying in the local economy? How do we actually support this by bridging the gap between the commercialization, the big corporates taking the money and taking the power away, to actually empowering the people, but actually understanding of where this money and how it's being put back into local community, and it's not being used for, let's say, stuff that it shouldn't be used for, depending on views you have, and actually bridging that gap. And there's nothing there. There's nothing there. There's,
Yeah.
there's,
There's
you
a
know,
bit of
there's,
white space for you.
Absolutely. It's a
Yeah.
great space
Yeah.
for us to come in and do something like that, and kind of keeping it more grounded as well, and understanding what the mission is at the end of the day as that positive social impact
Yeah.
side of things.
Yeah. So is the focus then in the next 12 months is just to build on this, to build out that hospitality client base in the Bristol area,
Yeah.
or yeah,
It's the infrastructure layers. That's the next couple of years, is those infrastructure layers. It's that SaaS and the APIs. So it's like going back and saying, well, you might have your own proprietary technology, but like booking.com is still huge. So would you allow an API coming in there? And you kind of have to think of, well, we could do that. And we could have layers of different APIs so they can use their. It's like if someone get your website, so they land on your website, why are you sending them off somewhere else that's going to cost you money? They've already found you.
yeah,
On
they
the other
found you.
side of it is, how do they find you? Maybe they find you on the big platforms such as Airbnb and so on, if you're doing that side of it. So I think you
Well,
need,
I think people are actually going to booking.com, finding what they want, and then they're saying, well, we'll just go to them directly. They'll get more money. We might get a better rate.
well, this is it. They're using Google Lens, aren't they? They take that, take it up, going, where's this from? They get their list, they go directly, and they save themselves 40, 50, 100 quid. And they think this is great. And so this is what I mean about the AI, and where are we going with this? What is it,
Yeah.
the tool? What can we
Yeah.
do? And when we,
Yeah.
the best thing we can do, Stephen, is thinking about the journey that we're on and what we are building and what we are currently building. You always have to believe someone else is doing it. And if you believe that someone else is doing it and doing it better, it strives for you to be able to think, what else? Because even coding now, or AI, or whatever you're building on, whatever we have in 2 years' time, we're looking to think, how can we improve? The coding from 5 years ago now needs to be updated and so on. And you don't want it to be a patch job of just adding stuff together. You need to make sure the infrastructure and the kind of, the bottom end of what you are building actually can stand up and actually can grow and kind of expand and kind of go from there over the next kind of couple of years. Otherwise, you're already fighting a losing battle from internal resources that you're having to redo everything again and again. So there's many different layers to this, of course.
There sure is. Christian, it's been a real pleasure having you on FinTech Frontiers, and thanks for sharing your insights and on the inspiring work you're doing at Payji. So we're really wishing you every success, and we're going to be cheering you on and watching your progress over the coming months and years.
Thanks,
Thank
Stephen.
you.
Really, really, really enjoyed it. And thank you for having me on. Really appreciate it.
Absolute pleasure.